The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, joining us now as we recap the February World Agricultural Supply and Demand Estimates report. We wanted a little extra analysis here today of the report. Happy to grab a few minutes with Tyler Schau, partner at agmarket.net, joining us here on Market Talk. Tyler, good to catch up with you. Busy report day. Looking at things, USDA, the cuts that they made to the South American crop, Brazil specifically, corn was pretty much in line. Soybeans, though, that number came in a bit higher than many of the pre-report estimates. And overall, it just felt like those numbers were kind of bearish to at least what the market was thinking early on. Your thoughts on overall on those South American numbers? I know that was the big one that a lot of folks were watching on Thursday.
Yeah, we met earlier last week to discuss kind of our estimates, and one of the things we talked quite a bit about is, this is an estimate of what USDA is going to say, not of what we actually think is down there. So, we thought we'd see a little more of a reduction on their soy. They went from 157 down to 156. I think we were somewhere, maybe a million metric ton lower than that. So it's not surprising. I mean, I'll start off with that. It's not surprising that they didn't reduce Brazilian soy crop more than they did. I think what's kind of catching everyone off guard right now is CONAB came out earlier this morning, sub 150 million metric ton. So, it's kind of hard to compare that. But, one of the things that I'll point out is the USDA also raised last year's Brazilian crop from 160 up to 162 on this recent WASDE report. And I believe CONAB's down in the 154, 155 range for last year. So there's a disconnect. And, unfortunately for market prices today, the world trades the USDA report.
Definitely does. And on top of that, U.S. ending stocks for soybeans, corn, wheat all came in above pre-report expectations on this report, Tyler. And I also saw, too, USDA cut soybean exports on the U.S. side, 35 million bushels. So a little more added to kind of the bearish side of the boat, so to speak.
Yeah, the export cuts maybe a little more aggressive than we thought you would see from the USDA. It doesn't really come to a big surprise. Our shipments are lagging, and when you compare, asking values for soybeans, Brazil's going to come in and undercut us by quite a bit. So it's definitely the fire sale on soybeans is in South America. It's going to remain that way throughout the summer, and so our inspections haven't kept up. Our sales haven't been high enough to justify where they're at. So it's not a surprise that they pulled that number down, maybe a little more aggressive than what we thought we'd see in the February report. As far as corn goes, we lied. We made the comment that you probably just saw the highest ending stocks for corn on the January report, and the USDA says, "Oh no, wait a minute, we're gonna make less sugar out of corn," and so they reduced food use by 10 million bushels. So that's where you saw that ending stocks increase on the corn side, and yeah, just an overall negative report for all grains.
Yeah, overall negative. World stocks too, and I know a lot of these numbers, we're going to be digesting them and going through them here over the next couple of days. World corn stocks were down slightly. Wheat stocks down slightly. World soybean stocks went up slightly on the latest reports. I know too, we've gotten Stats Canada out with Canadian grain stocks numbers. All that was pretty much in line with expectations. I guess overall here, Tyler, it just feels like as we're marketing through this environment in the grain and oilseed trade right now, we've talked about this. Just got to be smart. Some of these prices, not what folks want to see, but you just gotta have a plan in place, it seems, to try and navigate just this volatility and just some of the ugliness in these grain markets. And that's about the best way I could put it, is just kind of ugly markets here as of late, right?
Yeah, the narrative hasn't changed. High supply, and then the 3 years of high prices preceding have just really, you know, end users and users in general have figured out a way to substitute around, and they're sitting on their hands, much the way the farmer was sitting on his hands as prices were going higher. And end users were scrambling to get coverage. Now it's the opposite. The end users are sitting on their hands to see how much cheaper they can get this product bought, and the farmers are left scrambling, trying to figure out what to do. And you hit the nail on the head. You got to have a plan, and then the key is putting that plan into action. And I work with producers from all over the country, and I can work with guys that are on both sides of that coin. Those that had a plan and put it into action, those that drug their feet and that didn't enact their plan, and I've got guys that never did get a plan put together. And I can tell you, the ones that had a plan and put it into action, they might not love these prices, but they're feeling okay about their position right now.
And looking at things here, I mean, we've been setting new contract lows in front month March corn. Obviously, all these soybean numbers. I look at charts on like Minneapolis spring wheat. We've lost a lot of the carry in that market. So, I mean, things to your point, maybe not great, but having that plan and managing it here going to be key. And we do have a lot of other volatility potentially in front of us here. We got USDA's Outlook Forum next week. I know we got other reports coming up here from USDA and more, and we got a ways to go before we start planting here in the U.S. In a couple of months. So acreage battle and more. There's plenty in front of us here the next few weeks and months ahead, right, Tyler?
Yeah, I mean, as I said, the narrative is negative right now. We're in a long-term bear market, but there are bear market rallies. They're not going to be. You need to remove $6 corn from your brain for a little bit, and $14 and $15 soybeans. We're going to get some type of movement. There's been a lot of talk about the size of the managed money position on the short side, really in all grains. So there's reason to believe that we will, we'll see some type of a rally and a move higher. You've just got to be ready to pull the trigger, have some targets in place, have resting orders at the elevator with your broker, whatever, so that when we hit those points, you get something done. The outlook is right now isn't the best, but one of the things I try to remind customers, and it got mentioned at our conference this last weekend, the market's job is to punish those that are out of position. And it's going to make you feel like you're off sides until you aren't. And you just want to make sure you're ready to take advantage when it gives you those opportunities.
Great point. Great point. I know too, just real quick, a couple livestock notes from you. And we're still, again, wading through a lot of this data from USDA. Cattle markets had a lot more optimism. Looking at the WASDE beef production forecast raised from last month, pork production lowered on a slower pace of slaughter. Just a couple of the headlines that jumped out at me there. I mean, as you've looked at the WASDE numbers, anything major jump out at you that could impact this livestock trade, or anything from the grain side that could maybe impact their livestock trade, Tyler?
There wasn't a lot coming out of the WASDE that really came as a shock. We've known that cattle numbers are going to be lower. That's not really anything new. And sometimes I think the WASDE kind of lacks maybe what's a little bit of reality in the fact that that they've still. I think in future WASDE reports, you're likely to see that beef production number drop as it tries to catch up with just the lack of calves that are out there. We were up strong earlier today. There was a little bit of a sell-off. We're up against some pretty good resistance on channel. I mean, any way you want to slice it, there's some resistance up there that's just kind of got this market a little bit scared. But I talked to a lot of producers, cow-calf guys, talked to a lot of cattle feeders, and I talked to a lot of guys that are background in calves, and I keep coming back to the same thing. There's nothing out there that I'm picking up the phone saying, hey, you've got to put hedges on, you've got to protect this. But if you're calling me, asking me if you should, I'm not going to talk you out of it. You've got the opportunity to lock in some record high prices again, and maybe you've got a really short-term memory and forget what it was like in October and November watching that feeder board just fall apart. It can happen at any point, and it doesn't have to have a real great reason.
I think too, a lot of cattle guys and gals have taken advantage of things like LRP here in the last few months. So that's maybe a little extra incentive to not worry as much per se and put hedges on since they have some of that LRP protection, right?
Yeah, I deal with a lot of that. I've had a lot of phone calls really in the last couple of days, and that's guys are wondering how in the world are they paying what they're paying for these 6 and 7 weights in sale barns. And when we work the math backwards, it basically comes down to, they're probably likely going out and putting LRP on them immediately, and they're still locking in a decent break profit. They're guaranteed some money for running their calves. They're paying for the grass and the feed that they're going to have. So it just makes sense, especially on the heels of a lot of producers had record profits last year. They don't want to give that back. So they're making use of the inputs they've got, and they're putting some protection in there. And that's why I say, if you call and you want to put it on, I put some LRP on for a producer earlier today that's running some grass calves. And his first question is it going to go higher? And I said, very likely. But I'm not going to tell you that this is a bad idea. Like you're locking in a feeder calf index $5 above the record high. So I can't tell you it's a poor idea. And my title on my business card does say hedge specialist. So if I told you to wait, I'd be a pretty poor hedge specialist, I guess.
Well, we really appreciate your thoughts and your specialist recommendations. And thanks for the time as always. Tyler Schau with agmarket.net. Good to catch up with you. Thanks for a WASDE recap with us, and we'll talk to you again soon.
Thanks, Jesse.
If you miss an episode of Market Talk, you can listen back to the show anytime. Just search for Market Talk on your podcast platform of choice, and you can hear past episodes of the program on demand.